Want to take a deeper dive into the numbers from Datadog. And for that, we bring in Sylvia Jablonski's here, Chief Investment Officer, Defiance ETFs. Great to see you. Good morning. Let's start off with Datadog. These are the earnings in focus here, down about 8% this morning. It looks like for 1 year it has almost a 10% gain, but it looks like it's going to erase some of that.
Yeah, I think, Datadog is a prominent player in AI and analytics. They give you, insights into infrastructure. I actually like this read, right? Last quarter, they had a 26% increase in revenues, and we were looking for 20%. We were looking for a 0.43. We got a 0.49. So actually, in the near term, they've done quite well. But as we know, this earnings season, it's been a lot about the forward outlook, and the stocks that are kind of not giving us what we hoped for in the future are the ones that are being punished. With a stock like Datadog, though, just with the massive growth in AI, infrastructure, cloud, the need for these types of monitoring analytics tools, I think that you're probably going to see a lot of investors maybe looking to buy on the dip here. I think they have a really good long-term story and prospect here.
There were some concerns about revenue and margins going forward. I did see some analysts downgrading the stock, though D.A. Davidson, let's see, has a buy rating, a 165 target. Final quick thoughts on this one?
Yeah, again, I think I like this one on the dip. I think they have great consumer retention. I think that they're innovative. They're leaders in this analytics and monitoring space. And with the growth of AI and quantum computing, I just think that there's going to be a huge role for them in that ecosystem. And it's a stock I like when it kind of falls, and I get to buy on the dip on this one.
Yeah. I wanted to check out Deere this morning, which over 1 year is up about 25%. But this morning here, the profit cut in half, sales slumping. Not a great morning. It's down. It's been down over 5%. What's the story on Deere in your opinion?
So I'm kind of neutral on this one. Deere is the leading global manufacturer in agriculture, so they have both the domestic and kind of global presence there. And Deere is doing a lot of work to automate and use AI to do different things. Whether it's to use less pesticides in farming, to have processes and their factory work kind of fully automated. And I think that bodes well in the future for this company. They pay a nice dividend, 1.39 or so is the last div on this. So I think it tends to be, a stock that people hold in their income portfolios, but I don't necessarily think it's going to be a high flyer. They are talking about potentially looking at 15% growth next year. And I think, that's kind of I think it's a good stable income play. I don't think you're going to get, kind of that hyperbolic growth out of this one.
And look, neither Deere nor Caterpillar, while people aren't bearish on these stocks, they're not particularly bullish overall on the big picture and the stories that would be the catalysts for these names.
Yeah, exactly. And there's just so many different parts of the market right now that are generating, attention. And I think like the, AI and the AI power story, like the Vistras, the Constellations, the GE Vernovas and things like this. And it's just kind of not the hot topic in the market. But again, this is a steady, steady large cap that pays a nice dividend. I think a lot of people own it, whether through index exposure or in their dividend stocks. And so I'm kind of neutral on it. I probably wouldn't be a buyer here, though.
How are you feeling about the markets? We're moments away from the PPI and claims and overall, I mean, what are you thinking about 2025, at least this first half?
I think 2025 is going to be a good year, but I think it's going to be a volatile year, right? We have a new president in office, and there's a lot of changes coming through, whether it's tariffs, whether it's regulation. So I think overall the economy is in good shape. We have GDP between 2 to 3%. We have consumer spending is good. Wages and jobs remain pretty steady. The caveat is kind of like what happens with inflation, right? I think that's on the minds of a lot of investors. And that's something that can set stocks back. But I think overall, we've just kind of proven that the economy is pretty strong. Earnings are looking really good. It's hard not to stay invested in equities when, you can probably still get double-digit returns versus cash and treasuries, which just looked a lot more appealing a few years ago, right? The equity markets kind of proved themselves again. And so I think cash is going to come off the sidelines, but, be prepared. There's a lot of volatility now. But there's more volatility than we're used to, I should say.
Right. And, most of the folks I speak with still feel that the end of the year will be higher than where we are today. At the same time, they are, I'm just getting some bits and pieces of concern, the uncertainty about the tariffs, the geopolitical concerns, whether it's, Israel and Hamas or Russia and Ukraine, stagflation fears, whether, we might just have high inflation and just, high unemployment and low economic growth. All these different things are sort of popping up. Your thoughts?
Yeah, and I think that all of those things are, kind of potential, market fears and things that could cause the market to pull back. And that's why I think we'll see some volatility, right? Every time you get an announcement about tariffs, the market pulls back, and then a couple of days later, investors realize that it felt like that was more the art of the deal than really kind of like shutting down trade and things like this. And so I think overall, this president is pro business, pro tax cuts, things like this, lower regulation. I think that tends to do, good things for markets. But to your point, there's always this, geopolitical news and things like this that have come into play the last couple of years that can lead to volatility.
And just quickly, today, for example, we're waiting on PPI, right? CPI came in hot. PPI may have some hot part of the print. I don't know. Coupled with the reciprocal tariffs are likely to be announced today. Those never seem to go particularly well, but sometimes that might be a boost. If there's a sell-off, would you buy today?
Yeah, I would. When we have these, notable sell-off days where you see the broad-based indices down, 1 to 2+%, I think that those are decent buying opportunities as long as you're planning to hold for a long time. And again, just because the macro backdrop is still pretty good. We have a strong economy, corporate earnings are good, and interest rates have remained high all of this time. And, these major corporations are coming out with pretty stellar earnings given that handcuff. And I think, whether or not it's this year or next year, that's ultimately going to come down. So I do think it's good to be in the market and buy on dips.
All right. Yeah. And we saw pharma and autos doing well on the idea of reciprocal tariffs. So we'll see. Sylvia Jablonski, great to see you at Defiance ETFs. Thank you.